Hi, this is Joe Rabil with Rabil Stock Research. So we've got a lot to talk about today. I want to go through all the indices today on this show, and also want to look at rates. I'm going to look at the 10-year rates. I want to look at Bitcoin Trust. I want to look at the oil action as well, and then I'm going to go through the symbol requests that came through. But what I want to do is start by really taking a hard look at the S&P and taking a step back. And what happens when we get into this type of environment is we want to actually jump up a time frame. So normally we're looking at monthly, weekly, daily, hourly. We're going to now look at the quarterly along with a monthly and a weekly, and just look at it from a longer term perspective, see where the bigger support levels are and how much trouble this is in from a bigger picture standpoint. So let's go ahead and get going with that. All right, I'm looking at the S&P 500 index, and I've got a weekly chart up. And what I've done here is last week I showed a daily chart with an 18-day, an 18-week, and an 18-month overlaid, using mathematics to basically create those lines. And I'm doing the same thing on the weekly chart. We're basically moving up a time frame, and now I've got an 18-week here. This magenta colored line, the green line is the 18-month, and the blue line is a quarterly 18. So that's looking at every 3 months using the 18 MA for that time frame. All right. Now, what I want to point out here is, and I've actually overlaid the zigzag as well, because I want to point out a couple things. First of all, I think it's different. What's taking place here versus 2022. What's really different in this is that 2022 gave a reversal of its trend. You see how this went from a new high. If you look at the way the swing chart played out, we took out a prior low, made a lower high, made a lower low. We reversed the trend here. All right. So this trend was reversed even before it broke the 18-month line. And we go through a bear market phase. To me, this is a lot different. This is just a flush to the downside. There's no interrupting intermittent swings. It's just straight down. All right. Now, the reason why that's important to me is that I know that we haven't actually changed the trend to the downside. It's not a reversal to the downside. It's obviously a very harsh decline, but it doesn't really meet the criteria for a trend change in my book. All right. So if that's the case, we want to go back and look. So this actually is the 2020 decline, the COVID decline. If you notice, all it did was basically just straight down as well. I guess it had a little interrupting swing, but that's an ABC down. That's not a reversal of trend. We didn't take out this first. So this is the same concept. Now, this was violent and it ended up undercutting the prior low. But we can go back and see that back in 2018, we had a little ABC decline. Again, no change in trend. And even back in 2016, it didn't really qualify as a trend change. So why is that important? Well, when I look at this, I'm kind of looking at three different things for buying on weakness, buying when things are down. Number one, I'm looking at this 50% retracement level. Now let's go back and look. So if you look at 2016, we made a low, we made a big move to the upside and peaked in 2018 and then came down to the quarterly line, and that met up with the 50% retracement of that move. You see how we had that 50% retracement. Now we had a pretty big increase in bearishness as well. Very important. So those are kind of the three things I'm looking for, is a 50% retracement in the area of the 50% retracement, in the area of a rising quarterly 18, all right, and we don't have trend change. All right. So if we have all those conditions in place, I think we can be a little bit more aggressive for longer term accounts if we want to be. Like if we're looking at our IRA and we've got some cash and we want to put some money to work. To me, opportunities like this to me are a lot better than paying here. So I try and avoid putting money to work in my 401k or IRA when it's way up in here, and wait for opportunities where things have worked off. Now, because this had trend change to the downside, you had to be a little bit more careful, but we did get divergence at the low. We had massive bearishness at the low. And again, we had this 50% retracement. You see how we're getting these 50% retracements. So right now we came down to the 50% level. We haven't met up with the quarterly line. So it's possible we still have a little bit of zigging and zagging to do. And I think one thing we have to be really careful about is we've made one move to the downside. If we rally up here and fail at the 18, which is rolled over, all right, and then come back down to the quarterly line, we're going to have changed the trend. And I think we've got to be a lot more careful, especially if we break the 50% retracement level, which is essentially this 4,800 level. If we come back down through the lows that were just made, and we do it in a violent way, we're not really holding it very well, then it might be a little bit more of a treacherous situation, maybe something like COVID where, it's a lot worse. Now, I think it's a lot different if we get a rally first. If we get a rally first and then come back down through here, then we have trend change associated with a break of the 50% level and potentially the break of the quarterly line. To me, that means I've got to be a little bit more careful. But if we just keep flushing to the downside and getting more and more bearish, we want to go down to a small time frame, daily chart or something like that, and look for big volume explosion here. All right. And so that to me is a key at this point, something we've got to keep a close eye on. All right, let's switch over to the other charts. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. There's a few other things I want to talk about on the spider chart now, just to point out what I'm kind of watching for right now. First of all, notice the strength of the momentum on the daily chart. You see this ADX? ADX is not only making a strong move through 25, but even during the rally phase, it held 25. That's a very strong bearish trend. All right, so we've got that in place. That's number one. Number two, if you look at the weekly, this move has now caused the red line has now made another higher high, and the green, so the red line is strength of the sellers. All right. The green line is the strength of the buyers. And now we've created an expansion phase strong enough that has gotten the ADX line above 25. So when we get this ADX line above 25, we think continuation or testing, which means even when we rally here, we should get another test. Now, the only time that is not the case is if we get some kind of a climax move. So if this keeps dropping into the next support zone, let's even say 450 or something like that, and this looks like the start of a new trend, but we get massive volume and a lot of bearishness. We already have a lot of bearishness, but if we get some more, I think we need a little bit more climatic action and come down to a bigger support zone, then this could be a lagging indicator, and it might not be as timely as we'd want it to be. But right now, based on what we're seeing, if we got a rally here, I think we'd have to assume we need to come back down and test this at a minimum and potentially go to another lower low. That to me is pretty important. All right. So got to keep that in mind. The other thing is that I'll just follow up to what I had talked about before. Remember, when we finish this month, actually during this month, during the course of this last month, we got contraction in these moving averages that caused this blue line, this ADX line on the monthly, to turn down. And what I said at the time was that, that essentially this is not going to be a short-term thing. It's going to take a little bit more time. Now, it could play out like this, where it goes sideways for several months, or what we're seeing right now is we're actually seeing deterioration to the downside, where red is actually higher than green now. The sellers are stronger, and now we've gotten the MACD to cross over. And again, that's another sign of resistance overhead. Even if we get a rally from here, there's going to be problems overhead, in my opinion. So, got to make sure we're covered from that standpoint, just recognizing that any trades right now are probably going to be met with some issues. Now, if I'm looking at this from a short-term standpoint, we have essentially broken the downtrend line, if you want to call it that, and we're testing this low. So if we come back up through here, then we do have a shot of coming back up into this next resistance area, say 550 or something like that, would be what I would be looking as a target. But it's a shorter-term trade from that standpoint, and I don't think I'd try and guess this by buying off this low based on how weak the whole pattern has been and how strong the downside momentum is. All right, so be really careful from that standpoint. All right, let's take a look at the QQQ. So this is why I've been using the QQQ on this weekly review, mainly because they're very, very similar. The patterns are similar. We've got strong ADX on the daily chart. We've got increasing strength on the weekly ADX. Look at the volume pattern. It's made a pretty big drop. This is actually maybe a little bit closer to longer term support, but we're not seeing any significant signs of trend change. We're going to have to see this come back up above this prior peak on the hourly chart to get any sign of real improvement here. And even that will be in the face of a bearish trend and bearish momentum on the higher time frames. So got to be careful here. I think we need to, give these a little bit of time to let the dust settle. Now, one of the other things I wanted to point out is that the relative line here, while it's not so bad this week, it's really has been showing signs of more of a weakening sign. If we look at the Dow Jones, it's a little bit different, right? We're seeing improvement in this relative line. Despite the drop, it's actually holding up a little bit better. Same concept though, a lot of violent selling, enough momentum to the downside to say, got to be careful here, but we're coming into a bigger support zone. Obviously, as I mentioned, when I started with the S&P chart, looking at the quarterly line and all that stuff, we've got the same. So let me just pull up the quarterly chart of the diamonds here. And we can see this is the quarterly line. Something I really love about this ACP. I can switch it to a quarterly. If I want to look at a yearly chart, I can do that as well. But look at this pullback developing, and you can see the pullbacks have been pretty good opportunities as we get closer and closer to this line. So just be careful, just based on the shorter term time frames. I think we've got to be a little bit more careful and see a little bit better volume, climax, something like that. All right, IWM I think is a lot weaker. This is in a much weaker position. It's below its 40-month moving average. The others are kind of coming down to that 40-month. It's not holding the support that this had at 200. It's broken that. And again, this is not a good sign. The conditions are not as good when the relative line versus the S&P are worse, right? Meaning when this is underperforming, typically not a great environment to be, trading, being real aggressive. We want to start to see that improve, and then I think that there'll be a greater expansion in the number of stocks that look attractive. So we'll keep an eyes on that one. All right, let's look at the rates, because I've gotten some questions on this, and I've definitely seen a lot of talk about rates coming down and all that. But if you look at this pattern, and again, most of this review is looking at the bigger picture pattern. If you see what's taken place here, we broke this downtrend. Look at this long downtrend line. We showed strength to the upside for the first time based on the buyers. Remember, this is based on this blue line going up is based on the buyers, the green line. This was red, right? Red. All the big moves have been to the downside. We finally got strength to the upside. Now, the reason why that's important is that if we go and we look at on a quarterly chart, what's happening here, you can see we've gotten the reversal. So this is where the 18 quarter dropped below the 40 quarter line. All right. And then if we notice, we just flipped that back to the upside with good momentum. So I'm more inclined to believe this is a pause after a very strong move with more upside and rates coming. So be a little bit more careful about, dipping your toes in the bonds. I think there could potentially be more risk than maybe people are thinking. Now, maybe in the near term, we could get some type of drop there, but it doesn't look to me, at least it's not represented here yet. In fact, the MACD is working its way back down to zero, and price is not doing that. It almost looks like a reverse divergence, and there's a lot of good momentum in place on the monthly chart. All right, let's look at this Bitcoin trust. So instead of looking at the BTC, we'll look at the Grayscale Bitcoin Trust, which I think does a really good representation of the price pattern, is very, very similar. The thing I wanted to point out is so far, it's really hung in there pretty well. The volume's actually been pretty light on this pullback. We're still okay. What I don't want to see is a break of this bar. All right, I don't want, this is a big green bar. We have retraced more than half of that bar, that big bar. So I know there's some weakness, but we don't want to take out this bar, and that would basically re-enter the whole move that we've seen here, this most recent move. I think that would be a lot more dangerous. I think anything above that green bar, if we can get a reversal back to the upside above the 18-month line, I think could be a pretty good play. So essentially what we're looking for is some strength here that gets ADX going to the upside and then play the first pullback, or look at that on a weekly chart as well. Any one of those approaches I think could be used. All right, look at the USO. I think this is pretty key because we had been working sideways. You can see this on the monthly chart. We had really just been in a sideways line. Very, very quiet, and then we get this big bar. Now, this doesn't mean that it has to drop significantly to the downside, but if we don't reverse this very quickly, then you have to sort of assume there's going to be some drift to the downside. We're going to need to come back up through this red bar now before we can feel good about any real positive action in the oil stocks, all right? Anything related to oil. Now, gas stocks are holding up pretty well, but oil stocks have really been hit along with this fund. So you just want to be aware of the damage being done and not necessarily looking to play weakness in here because of the way this damage is taking place. It is really not all that attractive. All right, let me go through a few requests that came through. So AMD, now this has obviously gotten worse since the request came in last week. But we failed at the 18-week line. You see how we were rallying here? We really need to get back above this 18-week. We've got bearish momentum. The MACD and the ADX are confirming. So what we're looking for is the next support area. And I think, when I look at this, it's not as clear cut. We had support here that's potentially breaking. If we can get a reversal quickly and get back above that, then maybe we get an undercut and rally pattern to develop potentially. If we don't, then I think we have to be very patient here because it's possible we could work our way all the way back down to this level. But it really isn't about, at that point, it's really not about the price. We're looking for improving conditions on the lower time frames, weekly, daily, hourly, and none of that is taking place. Now, if we come down to this support area down here and you want to be a little bit more aggressive, then you'd start with that. The reversal is going to start on the hourly. All right, so we need to get a C sign of climatic selling, get to near their bottom, get to the support, and then maybe consider that. IBM. So IBM is holding up really well. All right, now I think where we got to be careful are the relative strength stocks that have been good stocks. Like this has been a really good stock. It's had a really good run here. I do think there's a lot of support in this zone. All right, so we have something that could potentially be setting up. The problem I've got is that if the market is not done going down, then a stock like this is vulnerable to weakness. Relative strength is great until it isn't, meaning when the market is in a point where we're in a downdraft, you're going to hit markdown phase. The markdown phase are taking the strongest stocks and marking them down. So stocks like this are at risk still until the market makes a clean bottom. Now, we could be making a bottom this week, and if we are, then this could represent a good buy. But if we're going to do that, then we need to see an opportunity set up on this time frame. We need to come, we're pulling back towards support, but we don't really have any kind of a setup developing on this time frame. I'm not just going to jump in because we're down in support and it's holding up well. I'm still looking for a timely entry, and the fact that we just broke the 18-week line tells me I don't think we're ready from that standpoint. Nvidia's same concept, right? We're potentially breaking the 18-month line, but more important to me is that we've rolled this MACD through the signal line. So no matter what you think about this stock, like this is a great opportunity and I want to get in, odds are you're going to come back down, rally up and come back down because of what's going on in the MACD. I don't think this is a straight up move from here. So that's assuming it's not going to make a big move to the downside, which I'm not convinced of that either. So we could rally up and then go down, right? Or we could go up and then hold and then turn. And if that happens, then I want to look at this on the weekly chart, turning around, and things are going to have to reverse there. There's no real pattern. There's no real setup. Even though we're at the 18-month line, there's no setup developing on this time frame. And there's a lot of weakness. And Definitely some risk at this point of if the market keeps dropping, then these AI stocks are going to continue to be hit. All right. Let's take a look at one more. This Google pattern has made a pretty strong drop, right? Made a big drop. We're breaking the 18-month line. We're coming into support. All right. But again, look at the MACD rolling through. So, is this turn and go straight up? I don't think so. It might not be, by the time you get a setup, maybe you're paying a little bit more. But to me, this isn't the type of weakness that I want to buy when we're breaking the 18-month line in a violent way, not showing any real relative performance. And the momentum, look at the daily momentum, look at the strength of the selling on this time frame. It's just, to me, not something we really want to go diving in unless we're just going to do a short-term trade. And if we're doing that, we're watching the hourly, and we're probably only playing it up for a move back up to around, 170, 175, something like that. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, if you want to learn some more about some of these techniques, especially MACD and ADX in multiple timeframes, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.